It does take us to our talk of the tape, this run in stocks, and whether the recent backup in interest rates is something to start worrying about. Let's ask Chris Harvey. He is the head of equity strategy for Wells Fargo Securities, back here at Post 9. It's nice to see you.
Good to be back.
I always talk about the fact that you've been really optimistic. You have a high target still. You were not moved enough to reduce it. Thought we could still do some good things in this market, but now we have rates backing up. You got your eye on that?
We do have our eye on rates. What we're worried about is, what is this telling us? Is this telling us that recession is a lower probability, or is this telling us that we have a problem with the deficit? And if it's a problem with the deficit, this can keep going. At the end of the day, we are seeing rates come in a little bit on some of the economic numbers, but it's a concern, it's a worry.
What about if it is in fact the latter?
Right.
Concerns about this ever-escalating deficit. We're talking about a budget on the Hill, close to the finish line on that, and it's going to be an expensive price tag. Is this the bond market saying, whoa, a little too high?
I think so. I think the bond market's saying, guys, we need to do something here, right? We talked about the Doge. I thought you guys were going to get this under control. Now we're spending more money. Why are we doing this? We don't want you to do this. We want you to show some fiscal discipline. Let's see it.
So you were, like I said, you were optimistic even before last weekend, right?
Yeah.
Where we had the rollback of the tariffs on China.
Yeah.
So I was expecting you to come in today, with a bit of a flex, saying, hey, this is why I've been optimistic. I figured this too shall pass. We'll get on to better things like tax cuts and deregulation. Are you not more optimistic than you were just last week, despite the move in rates?
It's a long year. We're not out of the woods. We'll get some more volatility. A lot of the things we expected to see are beginning to happen. We're happy about that. But we're one tweet away from something going wrong. What if India comes out and says, yeah, we really can't come to this table. We can't get to an agreement. What if Japan says the same thing? Then we have a problem. We're heading in that direction. I'm pretty constructive on it. And I do think that the second half of the year is going to be much better. We haven't seen the benefits from deregulation. I do believe the Fed's going to be cutting rates. And we've had a pretty good repricing of risk. That AI trade has looked more attractive, starting to move once again. But that's a great secular trade that's very U.S.-centric that we like a lot.
You just said, did I hear you right? The Fed's going to be cutting rates?
I did say that.
I mean, the market's not necessarily so sure anymore. We pushed it out to September. Some say we might not get any. And if we do, it's for the wrong reasons now.
So this is what we think. We think we're going to get more and more progress on trade and tariff. What has held up the Fed? Uncertainty about trade and tariff. We resolved that. There's not much for them to do except normalize rates in our estimation. We are seeing, from what we're looking at, we are seeing inflation come down. We are worried about a slowdown. We think people can look. One of the reasons why we're positive and optimistic is we think people can look through that slowdown if you make progress on trade and tariff. And again, it appears to be true, but one of the reasons why we're not here flexing and saying, oh, we knew it was great, is because there's still a lot of risk out there.
Yeah,
right?
I mean, like the rates thing, which we're talking about, like the Fed, which maybe the calculus has changed.